Good afternoon, everyone, and welcome to KLG's second educational webinar titled Demystifying Forensic Accounting and Business Valuations, presented by Jeffrey Gibralter and Richard Byllott. I'm Samantha Brennan, the Director of Business Development here at KLG, and I'm thrilled to see so many of you joining us today. Before we dive into the presentation, I'd like to take a moment to introduce our partners. First up, we have Jeffrey Gibralter. Jeff is a partner with KLG, bringing over 20 years of experience to the table. He's been involved in thousands of engagements revolving around business valuations and forensic accounting. Jeff's expertise spans a wide range of areas, including matrimonial and family law matters, estate and gift tax planning, shareholder and partnership disputes, business transaction and damage matters. With a background in litigation and forensic consulting, accounting and auditing, and tax consulting, Jeff is a powerhouse in this field. He's been court appointed as a neutral financial expert and has provided expert witness testimony on numerous occasions throughout New York State, Connecticut, and even federal court. Jeff has also published various articles and speaks frequently on the topics we'll be covering today. Joined by Jeff today is Richard Byllott, a senior associate with KLG. Rich specializes in business valuation and litigation consulting with a focus on closely held companies, attorneys, and financial professionals. Rich is a licensed CPA in New York. He also earned both ABV and CFF designations from the AICPA, as well as the CFE designation. He's actively involved in professional organizations such as the AICPA Forensic and Valuation Services Section and the New York State Society of CPAs Business Valuation and Litigation Service Committees. With his expertise in business valuations, forensic accounting, and asset tracing, Rich brings a wealth of knowledge to today's discussion. Now, before we proceed, I just want to make it clear that the information presented in this webinar is for educational purposes only. It's not intended to provide legal, accounting, valuation, or tax advice and should not be construed as such. The opinions expressed here do not necessarily reflect those of KLG Business Valuators and Forensic Accountants, LLC regarding specific matters. Any examples provided are for illustrative purposes only, and the materials presented today may not be distributed without the express consent of KLG Business Valuators and Forensic Accountants, LLC. With that being said, let's get into the presentation. Jeff and Rich, take it away.
All right, great. Thank you so much, Sammy. Good afternoon, everyone, and thank you for joining us. We had over 150 people registered for today's webinar, so we're really excited to see that this is a topic of interest. This is our second webinar so far this year, and we're going to continue to offer webinars throughout the remainder of the year. If there's specific topics of interest that you want us to present on, please let us know. There'll be a survey that goes out after the webinar. Also, if you feel a particular webinar would be relevant for your entire firm, we're happy to schedule something. So we have a lot to cover. We want to be mindful of everyone's time today. So if you have questions along the way, please enter them in the Q&A section at the bottom of your screen. If we're not able to address the questions during the presentation or at the end of the presentation, we'll make sure that we reach out to you individually to respond to the questions. Today's topic is demystifying forensic accounting and business valuations. So this webinar really is not only relevant for matrimonial matters, but also relates to other matters such as partnership disputes, corporate matters, etc. But since a large majority of you joining us today are matrimonial attorneys, there's going to be some specific references to matrimonial related documents, which we'll get into in a little bit. So what we're going to learn today is, first, learning the importance of forensic accounting. Two, showing you some of the techniques and methods utilized by forensic accountants and business valuators in determining income, cash flow, and value, and how forensic analysis leads to more accurate income assessments and business valuations, which really go hand in hand. In order for us to determine the value of a business, we first need to understand what the true cash flow is to the owner before they pay themselves and after consideration of any personal expenses paid for the business. So what does the term forensic accounting mean? The AICPA states that forensic accounting services involves the application of specialized knowledge and investigative skills of accounting records, financial statements, tax returns, and other related financial records to collect, analyze, and evaluate evidential matter, and to interpret and communicate findings in the courtroom, boardroom, or other legal or administrative venue. So that's kind of the textbook definition of forensic accounting. I thought this was pretty interesting. It's amazing what information you could find on Wikipedia. But Frank Wilson is credited with the birth of forensic accounting in the 1930s when he was working as a CPA, the Internal Revenue Service. He was assigned to investigate transactions of the infamous gangster Al Capone. Wilson's analysis of the financial records of Capone was used to indict him for federal income tax evasion. So it's said that this case established the significance of forensic accounting, which dates back to the 1930s or so. So at the onset of any engagement, before we even get into preparing valuation schedules, we're going to interview the parties. And I can't stress enough the importance of interviewing the parties, whether it's a matrimonial matter, corporate matter, partnership dispute. This is absolutely essential. And again, because the majority of you are matrimonial attorneys, I'll explain this kind of in the context of a matrimonial matter. So on every case, we'll always start by interviewing the non-titled spouse to understand, what their concerns are, what information they can share with us about the business. If the non-titled spouse, for example, doesn't have any concerns or works in the business and is knowledgeable about the books and records, we don't want to waste time doing forensic analysis if it's not necessary. On the other hand, if the non-titled spouse has a lot of concerns, we want to try and target our analysis. So for example, if there's a significant amount of cash spent in the marriage, this could be an indication that maybe there's some unreported revenue. Is there a business credit card? And if so, does the non-titled spouse have access to it? If they have access, what types of charges are they putting on the card? And are they using it for personal expenses? Or if they go to dinner or travel, is the titled spouse using a business card to pay? Is there discussion of some kind of second set of books or something like that? All this information will help us to really target the type of analysis that we're going to do on a case. From an interview with the titled spouse, it's amazing what information they may share if you just ask the question. I've had several cases over the years where I've asked for a second set of books and the titled spouse just hands it over, which eliminated a ton of time and professional fees. I was reviewing a dental practice once and saw in the general ledger an expense for Tulane University for like 20-something thousand. I said to the doctor, "What is this expense?" He goes, "My daughter's college," and he was paying it through the dental practice. So I never underestimate the amount of information you can learn from an interview of the parties. Also, Rich is going to go into this in a little more detail in a few minutes, but I just want to stress the importance of the parties' net worth statements. A few pages in lists the parties' lifestyle expenses. This is a very simple forensic accounting technique that we use on every case. So on every matrimonial matter, we'll always compare the spouse's net worth statements to see, what each of them represent in terms of what their annual living expenses are. And before even looking at a business tax return, we could compare that spending to the party's personal tax returns and see if the income reported is meeting the lifestyle expenses. Many cases, right off the bat, without doing much analysis, we can see there's a significant shortfall between lifestyle expenses and income. Of course, this doesn't automatically mean, that there's unreported income. There could be legitimate explanations, for how they're subsidizing this shortfall. There could be cash accounts or brokerage accounts that they're drawing down on, gifts from family members, an increase in debt. But just this simple technique, we use all the time, and it's something that you guys can easily do.
Hey, Jeff, we have a question in the chat.
Sure.
When interviewing spouses and personal income or unreported cash is being discussed, are parties concerned about the IRS? Also, what are you as forensic accountants responsible for in terms of reporting?
Yeah, so really, really good question. I mean, whenever we do interviews, we really try to highlight the fact that, we're not the IRS. We're just trying to understand what the true income and cash flow is of the business. Sometimes we'll get information, sometimes we won't get information. At the end of the day, we don't have a reporting requirement. If we find out about personal expenses, we're not obligated to bring that information to the IRS. Probably a good question. I'd be interested to hear what some of the attorneys on the line say about this and how they've handled this. But certainly, if that information is presented to a judge, there's no saying what a judge may do with that information and whether it could be turned over to the IRS. But in terms of us, we have no requirements to present that information to the IRS. But great question. Please keep them coming. We want to try, and I know it's a webinar with a lot of people, but we want to try and make this as interactive as possible.
Yeah, and just to piggyback on what Jeff was saying earlier, the interview of the parties is extremely important. And what I usually keep in mind is when I'm interviewing the parties, it's the first time they've ever seen me before. And I'm going into their life right now where they're in a situation where it's emotionally charged. There's disputes, could be with child visitation rights, maintenance, etc. So I try and keep the parties engaged. And what I mean by that is I'll introduce myself first. I'll let them know what the scope of the engagement is, confirm with them the date of marriage, the date of commencement, etc., and let them know that they're part of this process and that we don't have any reporting requirements, to the IRS, etc. Put them at ease a little bit. And I also let them know that it's not the first time they get to talk to us, because after the interview, if they're driving in their car a few days after and think they should have advised us of something, I tell them, call their attorney. They could always call us back. And when we do put reports together that has, a lot of cash or unreported income, we'll put it together for discussion and discussion purposes only, and settlement purposes. So attorneys may be able to keep it out of the court and try and settle, with the parties.
Right.
But the interview is very, very important.
Yeah, great point. Great point. So why do we perform forensic accounting for business valuation? So one, to identify the true revenue of the business. Second, to identify the true cash flow to the owners, right? So how much the owners actually make from the business before they pay themselves a salary and after consideration of any personal expenses that are paid through the business. And this is imperative for a bunch of reasons. I mean, first, to determine what the true value of the business is, right? So the higher the net income of the business, the higher the value of the business. And then also to determine what the spouse's true income for purposes of maintenance and child support. So now Rich is going to go through some of the key documents and information that we request, excuse me, on a typical matter.
Okay, yeah, thank you, Jeff. So hello, everyone, and thank you for joining Jeff and I today. As Jeff mentioned, I'll be reviewing at a very high level some of the key documents and information that forensic accountants would review. As the slide indicates, the scope of an engagement will dictate the type of documents we would request. The documents shown on the slide typically always are documents we will request in all matters. First, the business tax returns, which we use as a starting point to understand the reported financial picture of the company. I use the words reported financial picture because during our analysis of the documents, the information reported on the tax returns are usually subject to change based upon our findings. And when you're reviewing a business tax return on page 1, you can easily see the revenue, related expenses, and net income or loss that's being reported right on the first page. Financial statements. Some companies may have financial statements prepared by their accountants, and depending on the type of financial statement, there may be some level of assurance on them. For example, audited financial statements, reviewed financial statements, they have a degree of assurance from the accountants versus internally prepared financial statements and or tax returns. And generally, we will request to interview the business accountant if we have any questions about the financial statements or tax returns. I prepared thousands of tax returns. I was in public accounting and viewed thousands of sets of books and records. So I can detect at times quickly information I'm looking at, and it may not make any sense. And that's where we have to interview the accountant. I was on an engagement a year or two back, and we were working for the non-titled spouse. And I met with the titled spouse at his location, with his attorney, with their other expert, and their CPA. And as I said, I went through getting comfortable, with the client, going through some preliminary history and background questions. And then when I got to the financial section, the expert stopped me and said, the CPA has something to say to you. And when I looked at the CPA, he said, the years that you are analyzing, or that you're looking to analyze, were currently being audited. So I worked in, it's about $300,000 to $350,000 that I picked up that I thought were non-business expenses And when we got the final results, it was about the same $350,000 to $400,000. So, you look at tax returns and you have to take them sometimes at face value. And I just, printed this out before we started. But when you sign a tax return, and this is the reality, you're signing under penalties of perjury. I declare that I have examined this return, including accompanying schedules and statements, and to the best of my knowledge, belief it is true, correct, and complete. And the declaration of the preparer is based on all information of which the preparer has any knowledge. So I understand tax avoidance, but sometimes there's tax evasion, right? So you have to be, a little cognizant of that.
It's amazing to see. I mean, even under that, penalty of perjury, I would say probably in about 95%, if not more of the cases, that we look at, there's some form of personal expenses that are being paid for the business.
And some are egregious and some, well, I don't want to say it's normal, but
Right.
we see repetitive.
Yeah. Just to piggyback on one thing that you said though about in terms of the financial statements, what if we see financial statements and they're audited or they're reviewed, we're usually going to use the audited or reviewed financial statements because they have a different level of assurance than just the tax return. So we'll tend to use the financial statements in those situations.
And they also include notes concerning the business and accounting methods,
Right.
et cetera.
Yeah.
So we'll continue. So bank statements. Generally, we will review at least 3 years worth of bank statements to verify revenue, expenses, which we'll talk about in a little bit. Business agreements, ask for them, such as operating agreements, shareholder agreements, employment agreements, see what exists. I had many cases where the ownership interest reported on a tax return did not agree with the operating agreement, which is not uncommon, but something like this could end up being a legal issue as to what the true ownership of the business is. Business contracts. Need to ask about these documents. If a business entered into a contract 6 months prior to the date of commencement, we'd have to take this into our analysis. If the contract is expiring 6 months before the date of commencement, we'd have to take that into account as well. The company's books and records, which detail the revenue and expenses of the business, as well as other assets and liabilities. We have seen plenty of books and records that were a complete mess. But when this occurs, instead of us spinning our wheels trying to put it together, sometimes we'll reach out and contact counsel and the ex-counsel to recommend to their client to hire a bookkeeper, to update their records. That's not our business, but we can do it. Our business is rifling through the books and records, and uncovering information. And litigation claims and assessments. It's a good question I ask on every engagement. In my opinion, I'd like to see if there's any litigation claims or assessments. And if the answer is no, that's great, move on. But if not, what are the details and what is the likely outcome? I guess next slide. W-2s. W-2s issued by the company, which we'll get into more detail in a little later, but they're good documents to request. 1099s issued by the company. We ask this all the time. These will confirm vendors or non-employee compensation paid by the business. So if I see a name expense on the books for a Joe Smith for $5,000 and a 1099 was not issued to Joe Smith or an invoice cannot be produced, there's likelihood of an adjustment. Also credit cards paid by the company. This also we'll get into more detail a little later. Insurance documents. This could be especially helpful for a company that has a lot of assets to make sure that all items being insured are listed on the books. Results of IRS audits and New York State sales tax audits, always a question to ask. And to the extent there are add backs identified from the audits, we want to make sure that we're at least capturing these adjustments. I have a case going on right now where there was an audit adjustment of over $500,000, which you were adding back to income for purpose of evaluation. And on this engagement, we're doing an appreciation value. And this audit happened to happen in 2011 when the parties were married. So in 2023, we valued the business. In 2011, we valued the business, but we had to add the results of that audit, which increased the value as of date of marriage, which reduced the appreciation.
And just to note, I mean, just because there's an audit doesn't mean that they've captured everything.
Right.
There's many
Mhm.
cases where, oh yeah, we were audited, there were no findings, and yet we do an analysis of the books and records, and we see, that there are personal expenses being paid, for the business. Hopefully there's no IRS agents on the seminar today.
Right. So yeah, and if the engagement, is a matrimonial matter, there are certain other documents we would request. Jeff mentioned before the party's net worth statement. It's worth mentioning again. This is a great tool to find out the assets and liabilities of the parties, as well as their living expenses. And personal tax returns. We would analyze the reported income and compare it to the lifestyle expenses reported on the net worth statements. And just like business tax returns, personal tax returns, they're signing with the same perjury penalties. And we may also ask, for deeds and titles. And getting back to the personal tax returns and statements of net worth, very easy forensic technique to look at. Add up the personal expenses. If it's the personal expenses are adding up to $200,000 a year on the net worth statement, and you look at the party's 1040 with 3 dependents living on Long Island, and they have 150 of reported income and no other sorts of income, there could be an example that there's cash in the business. Also, we would review the business's website and social media accounts if they're relevant.
Hey, Rich,
So, yeah.
we have a question regarding the last key document slide. How do you guys obtain this information?
Well, when we when we are engaged, when we are retained and court appointed or retained, etc., we draft a preliminary information request of documents that we require, and we send it to counsel. And then counsel provides those documents, or the parties, provide those documents to us. And usually we don't get all the documents we need on the first go around. Then we'll send out another letter, a follow-up requesting documents. And also what ends up happening most times is after we interview after we do our interview with the parties, there may be other documents that we request that we didn't request the first time. So that's usually what we do. That's usually how we get them. We reach out to counsel for the information.
Yeah, so I mean, just to know, we don't have subpoena power, right? So we don't have the ability to subpoena records from the titled spouse, from the accountant. So we are relying on, counsel being able to obtain this information, whether it's directly, willfully, or if that information needs to be subpoenaed by counsel. And also from banks, there's times where we can't get information, and subpoenas need to be issued on banks to obtain additional documents.
Yeah, and also, the clock continues to move, right? Time continues to go. So, we can only, I think banks will only give and the IRS will give the information for the past 7 years. So if we're on engagement and it takes us 2 years to get some documents, and we have to go back, the 7th year, depending on the type of engagement, we may not be able to get those documents. So it's important to try and get the documents, but sooner than later. So I guess next slide.
And just so you guys know, we are going to send out at the end of the webinar, we're going to send out just a list of, like a basic document request, that we send out on most matters. And we'll send that to everyone by email.
Mm-hmm. That's a revenue. How to verify? We get this question a lot. How do you verify revenue? How do you determine if there's cash in the business, etc.? So I'm just going to go through, a few items that we normally do. So I mentioned bank statements earlier. We will review bank statements, and we will compare the deposits per the bank statement to the revenue reported on a tax return. If the deposits are higher on the bank statement than the revenue on a tax return, this could be an indication of unreported revenue, and we may need to make an adjustment for valuation purposes. We would also see if there are transfers in and out of other bank accounts that could be related accounts. And I mentioned earlier, we had a question, how do you get documents? Well, when we send out a document request on a business, we'll request bank accounts, which is plural, bank accounts. We're like all the accounts. However, sometimes it'll only be provided with one account. And after we go through our analysis, et cetera, we see that there's transfers from in and out of other accounts. And then we'll follow up with another document request, outlining these accounts. Also, we look at industry-specific documents, such as point of sale reports or billing management reports. These reports, and Jeff mentioned, they can act as a second set of books sometimes. For example, a billing management report for a dental practice would show cash payments or co-payments paid in cash that may not have been deposited or recorded as revenue. Same thing with a point of sale system for a restaurant or a retail store. I have a matrimonial case right now where the non-titled spouse was the biller for the medical practice. And during the interview, the non-titled spouse tells me, that all patients are given a receipt at the time of payment, and that the type of payment would then be entered into the system, whether it's check, credit card, or cash. And once the receipt was generated for the cash payment, the non-titled spouse would then void out the receipt as if the transaction never happened, and the cash would be stored at the party's home, which she claimed was roughly $80,000 per year. So in that interview, she just came out like a charging bull. She wasn't again about the IRS. She was asking those questions, but she wanted to make sure that we had that information.
Also, the importance of the interview. You never know what you're going to learn.
Yeah. And the personal financial statements or loan applications, we would examine these documents and compare them to other documents received to identify other discrepancies.
And just to jump in, loan documents. I mean, I had a couple of cases where, we received loan documents. You look at the personal tax return, you see, $100,000 of income reported, and they're applying for a loan, and they said that they have $250,000 of income. So that could be a good source to look to see discrepancies between, what's reported and what the reality might be.
Right. And also, PayPal accounts, Venmo accounts, Zelle accounts. If the business accepts these forms of payment, we want to make sure these documents are reviewed and the deposits are picked up as revenue. It used to be easier to hide these types of payments, but now banks are starting to issue 1099s over certain thresholds. 1099s, we'll request to see if they agree with revenue. Some businesses issue 1099s. If they provide them, we'll review them. And now Jeff is going to talk about some of the forensic accounting techniques we use to verify expenses.
We have another question. Let's say, for example, it's a cash business and you can't get register receipts. How do you determine the income?
Well, that's a great question. So the first thing, which we do is, what type of business is it? Is it a cash business? Is it a cash intensive business? Not all industries, not all businesses, accept a lot of cash, but sticking
exchange.
And sticking on that, when we do our interview of the non-titled spouse, we'll ask, is there any big purchases that you make in cash or that is known to be made in cash? Cars, children's tuition, vacations, luxury items that that cash was used to buy. And as I mentioned earlier, did the spouse work for the business? And if the spouse worked for the business, what do they know about the business? Another giveaway is the statement of net worth. As I said, if the statement of net worth expenses exceed what they're reporting on a 1040, we know that's cash. And there's times we've relied just on the statement of net worth expenses to compute value and income instead of the tax return.
Yeah.
And also, I don't know if you got into it yet, but employee counts, especially in the entertainment industry, in bars and restaurants, where you walk in and you see, maybe 20 employees there, and you only have 4 W-2s in your hand. So some of this being cash there that that deposit probably, and they're paying the employees off the books.
Yeah. I mean, I would say cash is less and less, than it used to be. I mean, if you go into stores now, most people pay by credit cards. It'll be interesting to see now that a lot of restaurants and, started with the gas stations, but now a lot of restaurants and bars are changing where if you use a credit card, now they charge you a service fee for using the credit card. So it'll be interesting if we see more cash, an uptick in cash because of that. But when you have a potential cash intensive business, like like a restaurant, trying to identify if there's that second set of books, is very helpful.
Yeah, and I'll just go through a quick case. I had a case where we had to value a commercial fishing business off the coast of Montauk, Long Island. That's a cash intensive business. They bring back the pounds of fish they caught, they sell them right on the pier for cash. And how do you determine what's happening there? When I interviewed the wife, she was telling me there's buckets of cash coming in and out of the house, or shoeboxes of cash coming in and out of the house. She didn't know how much. She could put a number on it. And when I interviewed the titled spouse, it was a dismal interview. He wasn't giving me any information. The general ledger was horrible. The bank statements really didn't show anything. But fortunately, because he was federally licensed, he had to file reports with the government of what the species of fish that he caught that day, or his charter boat caught that day, along with the number of pounds. So I was able to get from the government those reports. And yes, we calculated the pounds of fish that were caught by species type, looked up what the wholesale prices were, and his revenue was double than what was reported on the tax return.
Yeah.
So there's other methods you can use, if you understand the industry. And that report we prepared for settlement and discussion purposes only, and it's settled. And they didn't come back to us and say, where do you get this crazy number from? Because we use information he signed, because these documents had to require dual signatures.
Right. Right.
So
back in the day, we used to say we counted pizza boxes, for pizza place. Or we looked at the water bills for a laundromat, to see the volume of water that they were using. But these are all different types of forensic accounting techniques that you could use to identify these things. All right, great. So quick accounting lesson. Okay, so revenue of a business less the expenses of a business gives you the net income or loss. So Rich talked about some forensic accounting techniques to verify revenue. Now let's take a look at how we verify the expenses. And so this to me is always the fun part, seeing the types of expenses. Oops. Seeing the types of expenses that business owners run through their business. I've seen some crazy stuff: exotic cars, yacht expenses, crazy vacations, private jet subscriptions, some really cool stuff that we see. And a lot of it is just right in front of you, right in the general ledger. I mentioned this earlier, but I'd say probably about 95% of the cases, if not more, that we work on, there's some level of personal expenses that's paid through the business. And it ranges from, very minimal to very excessive. I had a case a couple of years ago, and we calculated almost $2.5 million of personal expenses paid through the business on about $12 million of revenue. So that's almost 20% of the total revenue. A case like that, has to settle. I mean, how could something like that go before a judge? And in this case, these personal expenses were easily identified by reviewing the general ledger. So another accounting lesson. What is a general ledger? So a general ledger is basically the checkbook of the business, right? It shows for every expense, the date of the transaction, the amount, the vendor that was paid, and the expense category it was classified to on the income statement. So for example, if the expense was for a flight or for a rental car, it might be categorized to travel expense on the general ledger. And so a large majority of the businesses we value use QuickBooks as their accounting system, but there's other systems that we see. Peachtree, I don't know, I haven't seen that one in a long time, but Peachtree is another accounting program. Quicken. Then there's many proprietary type systems that are used, probably more for like manufacturing companies where they need to track their inventory. But in all these cases, in all these systems, there's some form of general ledger that each of these systems can produce. So we'll always request a backup copy of the data file so we can run our own reports. Obviously, if it's a proprietary system, we're not going to be able to do that. But if it's a more common system like QuickBooks, Peachtree, Quicken, we have the software, we'll request the backup copies of the data files so we can run our own reports. If we don't get that, we're going to ask for reports like the general ledgers to be exported into Excel so we can analyze it electronically. And worst case, if we're given a hard copy of a general ledger, we use software we have to try and convert it to Excel so we can analyze the data more efficiently. So general ledgers could be hundreds or thousands of line items. Again, since it shows all the individual transactions. So where do you find the expenses? So your last accounting lesson for the day, I promise. Within the general ledger, okay, you're first going to see the balance sheet accounts. So the assets, such as cash, accounts receivable. Then you're going to see the liability accounts, such as accounts payable, debt. Then you're going to see the equity, such as retained earnings. So all that is the balance sheet accounts, and you're going to skip right past that. Okay, you're going to scroll down to the income statement accounts, and first you're going to see revenue and all the specific revenue transactions by date. And then after revenue are going to be all the expense accounts. So here you can review the line items to see what vendors and what types of expenses are being paid through the business. And again, this is a really simple forensic accounting technique that anyone can do to just start getting a feel for the volume of personal expenses that are being paid through the business. Now, there's some nuances that we're not going to get into today. It gets a little complicated, but just worth quickly mentioning. When we analyze the data, we always check to make sure that the QuickBooks reports agree at least substantially to the tax returns. And if it doesn't, then it means that there's probably some general journal entries or accounting entries that the accountant has made. And so we're going to need to request that information. Okay, so let's take a look. So this is an example of what a general ledger would look like. Okay, some of the expenses we see in a general ledger. So this is a pretty typical layout of a general ledger report. There's more columns that are hidden, but you're going to see the expense account on the left. Okay, so purchases, auto expense, and these are the categories that the individual transactions are being booked to, and then ultimately will roll up to a similar type category on the tax return. You're going to have the payment type, the check, how they're paying, whether it's a check or wire or some other form. What's not shown here, though, it would be a column also for check numbers. That's hidden in this case. The date of the transaction, the vendor name or who the expense was paid to. Forget about the column labeled split, and then the amount of the transaction. So the next few slides are examples from the case that I mentioned earlier that had about $2.5 million of personal expenses. And in that case, there were about 3,600 line items of personal expenses we flagged. So you could just imagine the volume of all the transactions. I mean, there was probably well over 10,000 line items in total. And of that, we identified about 3,600 line items that were questionable. So within purchases, we saw payments to various credit cards, and Rich is going to get into a little bit more detail on this in a few minutes. But in this case, we only see monthly payments to the credit card companies and not the detail of the activity, of what the actual transactions are that are going to be listed on the credit card. So in a case like this, we would need to request the monthly credit card statements to see what the charges were for. So for example, the first line was a payment to Amex for $5,002, but we need the credit card statements to see the individual transactions that make up that amount. In this case, they were just making, the lump sum payment and classifying that lump sum payment to the purchases. In some cases, though, we'll actually see that the detail of the credit cards is actually imported from the credit card companies into QuickBooks. And so if it's imported into QuickBooks, you're going to see all the transaction detail, right there in QuickBooks. With an auto expense.
Yeah, and just to point out, when you're reviewing the general ledger and you look at the names, if you look on 12/26 of 23, it says withdrawal. So who was that withdrawn cash from the bank, and what's the backup to that information? And sometimes we'll get a general ledger where we'll have the check number, the dollar amount, but the payee is blank. So we have to find out about that information on our interview.
Yeah, great point. Actually, right above that transaction that Rich just mentioned, the 12/26/23 one, the 2/16 one, we've redacted the name, but it says John Smith. So in this case, the owner of the business wrote a check to themselves for
Mhm.
$3,300 and it was classified under purchases. So you may see payments to the owner, you may see petty cash, you may see cash, as Rich said, blank transactions. So these are all things that you want to look for within the general ledger. Within auto expense, we see car washes, gasoline charges. Now, if the business was a delivery company, for example, a lot of gas charges would probably be expected, but you have to really consider what the purpose of the company is, what they do, what their business is. But if it's an online business, for example, we wouldn't expect to see gasoline charges. Within computer and internet, we see Apple Store, Microsoft Xbox. I guess the Apple Store could go either way. Maybe they're buying, new equipment. But Microsoft Xbox is obviously pretty self-explanatory. Okay, so auto insurance, right? Question here is going to be, is the cars for personal use or for business use, right? Does this type of business even need to have cars? So these are the types of questions that we're thinking when we see these types of transactions in the general ledger. Life insurance, who's the beneficiary of the policy? If it's the business, then it's probably a legitimate business expense. But if it's a spouse, it should probably be classified as a personal expense. Meal expense, and this is always a pretty fun category. You see a lot of 7-Eleven, in this case, goes anywhere from 7-Eleven to expensive meals at Il Molino for $1,100 in this example. But you just have to keep in mind that meals are already reduced by 50% on the tax return because the IRS only allows 50% to be deductible for tax purposes. So on the general ledger, you may have $10,000 of meal expense. Then you look at the tax return and you say, oh, there's only $5,000 that's being expensed. It's not because they're saying some of that's personal. It's because the IRS right off the bat is saying only 50% of that is deductible. But are the meals for business purposes or are they for personal? And there could be a very fine line between the two. And again, this is where the non-titled spouse's review is going to come in and be very helpful to us. Many times we'll ask the spouse to review the general ledgers because they can tell us, whether certain expenses are business or personal. Some more examples, office expense. You can see some of the vendors there, CVS, Duane Reade, Walgreens, Pottery Barn, Victoria's Secret. I mean, some of these could be business related, but probably not.
Or gifts.
Or gifts. Gifts. I don't think I've had a case yet where Victoria's Secret was a legitimate business expense, but you never know.
You never know.
Telephone expense. You see charges there, Sprint, T-Mobile, Verizon. I think they captured pretty much every every telephone vendor on the list, but and maybe it's legitimate, right? Again, what is the business purpose? Maybe they have employees that are out in the field and they cover their cell phone expenses, or maybe they're paying for the entire family's cell phone bills. Travel is obviously a big category. We see some airfare charges here. On the next slide, you see lodging, Uber charges, rental cars, etc. So I'm sure you get the picture, from seeing some of these examples. But the point really that we want to drive home is that, these are easy analyses, reviewing the general ledgers. These are easy things that attorneys can do, clients can do, to really start getting a feel for the volume of personal expenses that are being paid through the business.
And Jeff, so in the travel expenses and for lodging, Four Seasons Hotel, Hilton Garden Inn, Hilton Millennium, they came from the credit card, right?
And
so when Jeff was talking before about importing the credit cards, when the credit cards are imported, it's telling you the name of the charge that's on the card versus seeing American Express there for $5,000.
Exactly.
Yeah. So
yeah,
it's nice when when credit cards are imported into the general ledger system versus us going now and looking at the hard copies, to make determinations.
We've got a question in regards to the general ledgers. What happens if a business doesn't use QuickBooks?
Yeah, so I mean, kind of touched on this a little bit before, but there's many businesses that don't use QuickBooks. They may use other accounting programs, right? Like a Peachtree or Quicken or maybe some kind of proprietary system that's used in their particular industry. So if that's the case, we're going to request, again, the general ledger reports from those systems. But you have cases then where they just don't have any books and records, right? They may sit down with the accountant at the end of the year. They go through their bank statements with the accountant, and they will prepare the tax return based on that. So in cases like that, we'll request whatever information the accountant might have, whatever support the accountant might have. We will request if there's any Excel schedules or handwritten schedules. We've been handed handwritten books and records before of expenses, Excel schedules where people keep track. And if there's nothing out there, then we're going to have to look at the bank statements. Then we're going to review the bank statements. We're going to look at all of the withdrawals from the bank statements, all of the checks, and we're going to have to, in some ways, kind of recreate a little bit of that. Not necessarily recreating all of the expenses, but at least reviewing it to identify some personal expenses.
Yeah, and even though, like just mentioned, that there's sometimes there's industry-specific software, so when we come across industry-specific software, we have to try and, catch up on, how that system works. I'm dealing with a case right now where it's industry-specific software. It'll give you a trial balance, but it will not give you a general ledger because of the voluminous amount of transactions. So we'll have to just print out account by account by account to see what accounts you want to review and generate our information by account.
Yeah.
So QuickBooks is out there a lot for small businesses. They do use them. It's a great system. But then again, there's other systems out there that we have to get accustomed to, get used to. And at the end of the day, we get the data. But like Jeff said, if there's no books and records at all, then that gets a little time consuming.
Yeah.
And I don't want to jump ahead, but we also see businesses with 9 credit cards. So we actually have credit cards. We get 3, but then we see 3 different credit card accounts. But we see there's 9 different credit card payees in the general ledger.
Yeah.
And that's we have and to get all that together, to see is it being paid personally? Because sometimes an account will be paid with a personal check or a business check, because the corporate card, you have cards that are in corporate name and the cards that are in a personal name.
Right.
So I guess I'll continue on credit cards.
Yep, that's where you are.
Okay, so so as Jeff previously mentioned, if the business is using credit cards, is a transaction detail like we just went over, is it being ported into the general ledger, or do we just see monthly payments to the credit card company? If it's imported, the detail of the transaction will be right in the general ledger, and which is very easy to review, which we just reviewed. If it's not imported, who does the allocation of the charges and how are the personal expenses being treated? Is there a portion of the credit cards that are being allocated to shareholder drawer or loan accounts, or are all the charges being expensed? As Jeff had mentioned earlier as well. But usually we'll request credit card statements for 3 years. And if it's obvious that there are personal expenses, we will ask the parties each to review the charges and identify to us what's personal. For example, I may see various meal, travel, and other entertainment expenses on the card, but I don't want to have to be the one to make that decision. I'll give it to the clients. So what happens in a situation like that is the titled spouse, he has a set of American Express statements. The non-titled spouse has her set, and they just go down the statements and indicate what's personal in nature. And then when we get those back, we'll do a comparative, and sometimes we'll do 2 different cash flow analysis and 2 different valuations based on what one spouse said versus the other. And we come up with 2 numbers, and then it goes to counsel, and they'll have to discuss it with them, because we don't want to be, the one making that decision concerning the personal credit cards.
Yeah. I mean, at the end of the day, we're not the trier of fact, right? So we don't know if one party is telling us that a meal expense was for the family, and every family member was there, and then the other spouse is telling us, no, it was 100% business. We're not the one to make the determination. Sometimes they're obvious, and so if there's an expense that's pretty obviously personal, then we will make that determination. But if it's kind of borderline, or if there's, expenses for like meals or something, then we're going to ask, the parties to review it, and then we will do 2 scenarios of value if necessary, as Rich just went over.
Yeah. So how are we doing on time? Okay, so W-2s. So we will review the W-2s. Why? To see if there's any family members being paid through the business that may not be working for the business. We often see spouses or children that are not working in the business that receive W-2s. If that's the case, then adjustment has to be made to the future cash flow. And also, do the W-2s filed with the IRS equal the number of employees who work for the business? This could indicate employees that may be paid off the books. For example, as I mentioned before, if we see or told that a business has 20 employees and we only see 10 W-2s, the other 10 may be getting paid in cash. And then we'll figure out, Alex, what's the job title and what are you paying them per hour? I had this at a restaurant out east where, they were both titled spouses, were very upfront. They told me I only received 4 W-2s that tied out to the return. They had about 20 employees, that they were paying off the books, or maybe 16 off the books. And I got their job titles and what they pay them per hour, and did the math and added that back to revenue. Why do you need that information? Because if we're doing a restaurant, most restaurants could be valued as a multiple of revenue. So we want to increase the revenue, even though if we did it from a cash flow, we're going to take that expense on cash flow as well. Yeah. But we need to make the adjustment, for those differences.
Yeah. So just to jump in, just because there's unreported revenue doesn't mean, yes, it might get added to revenue, but it doesn't mean that there's unreported income. So we have to understand that, if a pizza restaurant or a restaurant like you were just describing has unreported revenue, they may be paying people off the books. They may be paying employees off the books. They may be paying vendors in cash. And so we're going to have to reduce for that. So to the extent that we're increasing revenue, we may also have to increase the expenses to account for that. So there may not be a net difference, a net adjustment, but we need to make sure that we factor, both the revenue side as well as the expense side in.
Yep, exactly. Where we have vendors. Yeah, vendors. We'll also review the vendors listed in the general ledger to make sure they're related to the industry that the business operates in. As well as during our interview with the non-titled spouse, I'll review the vendors with them to see if they know any vendors that could be personal in nature, like their landscaper. And for a construction company, I would expect to see building supply companies, but I wouldn't expect to see that in a medical practice, for example. And if there are vendors that we're not sure of, we'll do an internet search on the vendor's name to see what they do. Thanks to Google, right? So, yes, Jeff.
Okay, so I know we just threw a lot at you in the last 52 minutes. We tried to really summarize it, and keep it high level to tell you what are some of, the key forensic accounting techniques that we use on every case. So just a couple of final thoughts, and then hopefully we have some time for some additional questions. But the true income derived from the business is not only necessary to determine the true value of the business, but also for purposes of maintenance and child support. The higher the income, the higher the value of the business is going to be. And there are many forensic accounting techniques that attorneys or clients can do on their own to determine, whether personal expenses are being paid for the business, such as what we went over today, reviewing the statements of net worth, reviewing the general ledgers, looking at the deposits into a bank statement, looking at the activity on the credit cards. These are all simple exercises that anyone could do, that we do on most every case on a daily basis.
Exactly.
All right, so were there any additional questions, Sammy?
Yes, we have a few. We have about 10 or 11.
Okay, so we have probably 7-8 minutes or so. So why don't
Let's
we,
get 'em
why don't
going.
we go through a couple?
Sure. Okay, so first one, given complex business financials that may need to be uncovered through forensic accounting, how and when do parties determine their date of final separation?
So the date of separation or the date of our analysis is a legal determination, right? So we're told what date we're going to do our analysis of them as of. So date of commencement of the divorce action is typically a date, that we're always going to do evaluation or analysis as of. But there could be other dates. If there's gifts, well, first, if the business was owned prior to the marriage, there could be a valuation that's done as of the date of marriage. And then if there's gifting that occurs throughout the marriage, then we could be asked to do valuations and analysis at each of those dates of gift. So, there can be one or there can be many valuation dates. And then we could also be asked to do a current date valuation, depending on in New York State, typically it's date of commencement. In Connecticut, it's date of trial. So we could be asked to do a valuation as of current date, or if the facts of the case are specific enough, like COVID, for example.
Yeah, exactly.
If there's a COVID effect, right in, if we were doing a valuation as of, 2022, and COVID started in 2021, and was continued, we could be asked to do, a more current date. But that's not a determination that we make. That's a determination that's usually instructed by counsel or the court.
Yeah, and sometimes when we, do our evaluations, like Jeff said, if we come across, COVID 2020 and 2021, and we have the returns prior to that date, and we may not even utilize 2021 because that wasn't a reality of what was going on.
Sure.
So yeah, that's we need to keep that in mind as well.
Yep.
Ready for the next one?
Sure.
Okay. Can you do some forensic accounting legwork prior to divorce filing if you don't have any joint bank accounts or a line of sight to your spouse's businesses?
Yeah, so it's going to be hard. I mean, we could certainly, if you don't have any business records, all you have is a personal tax return. We could look at the personal tax return. From the personal tax return, we could identify what is the spouse's W-2. Is there pass-through income that's being reported on, a Schedule E, because they're receiving, income through a K-1. So if there's S corporations or, partnerships, if there's any type of pass-through entity. So from the personal tax return, which obviously the non-titled spouse, when I say non-titled spouse, obviously I'm referring to the non-business owner, but information that the non-titled spouse would have, they sign the tax return. So they should be able to easily get a copy of their tax return. So from that, there is information that we would be able to ascertain, but it would be really hard to do a deep dive without getting information about the business, specifically about the business. And especially if there's not a net worth statement, if an action hasn't been filed, if there's no net worth statement, that's out there yet, it's going to be tough.
Right. Yeah, and again, some of this information could end up being subpoenaed if they're not forthcoming with the information.
Right. Yeah.
Follow-up question to that question is, what if the spouse is not a W-2 employee, like a business owner?
Yeah, so if they're not if they are a W-2 employee, or if they are not a W-2 employee?
If they are not.
So if they are not a W-2 employee, then that means that their income is going to be, they own some kind of a business, whether it's a sole proprietorship, okay, that's going to be reported on Schedule C of the personal tax return, in which case we have the business booked, we have the business tax return, or it's going to be some kind of a pass-through entity. So an 1120S, an S corporation, a partnership, it's going to be some kind of a pass-through entity. And then all we're going to see is what the income is that flows over, but we're going to need the business tax returns and the books and records of the business to really be able to do a deep dive.
Yeah, and you're saying if the business owner doesn't Is that on W-2?
Yeah, I think the question was
Yeah.
if the business owner is
Yeah.
not, which means that they may just not take a W-2
Right,
salary.
so like, Jeff said, on a Schedule C, there's no requirement for the owner, to take a W-2 because he's paying tax at the personal level. So we'll look at the books and records and what that income is, we'll see what that is, but we'll also, if we're valuing that, we'll have to determine what reasonable compensation would be.
Yeah.
But then on the other side, if it's a corporation and he's not on a W-2 and he's 100% owner, that's a flag to me that he's living out of the business. He's paying his car out of the business. He's paying his American Express bills out of the business, potentially. Yeah, potentially.
Yeah.
Potentially. So we'd have to look at the books and records and then see what's happening there.
Yeah, and a C corp is going to be even harder to identify from a personal tax return because there's going to be no, there's no pass through, income. So if they're not taking a W-2, we're not going to see the pass through, income on there. That we're only going to see distributions that are being.
Yeah, the distributions and/or loan receivable.
Correct.
Because they're taking everything out as a loan, versus salary.
Right. Correct. So it is. It's 1:30 now. You want to do one more, Sammy, and then we'll.
Yeah, sure. Okay. How long can the forensic accounting process take? How does it fit into the divorce process? Can you get the titled spouse to cover the expenses? And at what point is it cost prohibitive?
Yeah, so that's a great question. So the hardest part and the longest part of most of our cases is actually getting the documents. So we'll always say we issue a document request with, if we, from the time that we receive the documents, we can wrap up a case within 3 to 6 weeks. So reviewing the documents, interviewing the parties, requesting additional documents, doing the forensic analysis that we need, writing reports, etc. We could wrap that up in 3 to 6 weeks. What delays cases is that it takes months and months, years sometimes even, to get the documents. We are constantly sending follow-ups. Every 2 weeks, we send a follow-up if we don't have documents. We want to let everyone know we're not the ones that are slowing this process. We're waiting for information. But once we get the information, things can move relatively quickly. The analysis can move relatively quickly, obviously, depending on how large of a business it is, how many business entities we're reviewing, stuff like that.
Yeah, and also if you have to contact the accountant during tax season,
right?
They're not going to get back to us so quickly because they're involved in deadlines.
Yeah. So
that comes into it a little bit as well.
Yeah, and I think there was a second part to that question that mentioned fees. Our fees are paid for by the parties. So to the extent that professional fees are needed, then those are motions that the attorneys would make in terms of obtaining support to basically cover professional fees. All right, so with that, I think there's other questions, and I promise we will definitely respond to everyone individually by email with answers to all the questions. And you can feel free to reach out to us also. We're happy to take any additional questions if someone wants to reach out by phone. But with that, we want to thank you for joining us today. Again, we're going to be emailing everyone a list of the key documents that we typically request for a business valuation assignment. And please make sure to fill out the surveys. You're going to receive a survey that's like 4 to 5 questions at the end of this. Please give us some feedback on the topics that interest you, so that we can make sure that we hear that for future webinars. So thank you very much for joining us.
Yes, thank you very much.